This is the Asia Trade. I'm Shery in Tokyo. The top stories this hour. A positive lead-in for Asia on hopes that diplomacy can end the Iran war. But oil's rising early in the session as the future of Iranian stockpiles and tolls in the Strait of Hormuz cloud the outlook. IBM shares soar with plans for a push into quantum computing chips, winning $1 billion backing from the Trump administration. And SpaceX preparing to launch the biggest version yet of a Starship rocket in a crucial test for Elon Musk's IPO plans.
I'm Haidi, Stroud-Watts in Sydney. Here's a setup for trading across Asia this Friday. As Shery mentioned, we're seeing some buds of optimism again on this hope that we could soon see a resolution to the US-Iran conflict. Of course, not much progress substantively has really been made despite these markets continuing to trade on the headlines. This is a setup as we get across to what we're expecting. This is a picture for the Kospi as we see futures looking mildly positive. Of course, not really compared to what we've seen in terms of the exuberance of the past few sessions, but that big pop that we saw yesterday on the back of the Nvidia numbers, looking like we could continue to see some positive trading again today. Nikkei futures looking pretty flat at the moment, and dollar yen is also sitting pretty flat as we continue to see the dollar pairing those gains in the overnight sessions, the optimism over Iran playing in their city, for one recommending sailing dollar yen into the next Bank of Japan meeting. But switching out the board, and what we are watching is really the impact of rates and oil, right? Because we're going to need both of these elements to kind of play along to create the further conditions for more of a risk rally in equities. Brent crude at the open will be expecting potentially for a little bit of upside there, given that we have seen that rise in New York traded crude 1.5% higher again after 3 days of declines. The statements by Iran on uranium, the Strait of Hormuz, pairing some of the earlier optimism over progress in these ongoing negotiations with the US. If you take a look at gold, we're seeing not much of a movement when it comes to spot gold. Sydney futures looking like we could see some positivity at the open, up by about 0.5%. And we're watching treasuries as they erase those drop as these oil prices are continuing to signal that some elements are still in play when it comes to the US and Iran situation. Well, SpaceX, in the meantime, preparing to test launch an updated version of its Starship rocket, a key test of the company's IPO plans as it gears up for the largest offering in history. Let's get more from our Bloomberg Tech co-anchor Ed Ludlow. So tell us about why this launch in particular matters.
We're back together, team. The launch matters. And the reason it matters is this is V3 of Starship. Everything is brand new. All of the hardware completely re-engineered from a brand new pad, Boca Chica, Starbase, Texas. And you're right to frame it in the context of future IPO plans, because when we last night were going through the S1 with that fine-tooth comb, SpaceX could just not be more clear on how critical Starship being a reusable system is to all of its future business plans. So this is a 1-hour test where from liftoff they will do various different scenarios, dummy satellite deployment, test the heat shield, which is completely re-engineered to get good imaging of it. The booster part will splash down in the Gulf of Mexico. They will not try to catch it. And the Starship part, basically the pointy bit at the top that's nice and shiny, will splash down, all being well and equal, in the Indian Ocean. But it's the data gathered from that that is so key to getting this system reusable.
That is the breakthrough challenge, right? The full reusability of this system, and also after what failed tests, failed explosions, related explosions as well. All of those shiny new parts that you talked about, how do they relate to making this a possibility?
Yeah, I think, this is fun, isn't it? When you read the S1, you're like, this is a Christopher Nolan sci-fi film script. This is not real. Because it's the vision where humans, 1 million of them are on Mars, and there is a web of data centers in space around planet Earth. The point with the new hardware is that it gives the performance of Starship to be able to achieve those things. So right now, the base case assumption is that Starship can carry 35 metric tons to low Earth orbit. But what they want to do with this third variant of Starship is get it then to 100 metric tons plus. Then in the future, the long-term ambitions, 150, 200 potentially expendable metric tons. When you get to that level, then all of these out there sci-fi, completely crazy ideas that are in the S1 and that Elon Musk has, they're achievable. And Starship is, they would argue, the only mechanism that can pull it off.
we've sort of been given a glimpse of what's going on behind the curtain when it comes to the finances, right? So I guess how important is the success of something like today going towards that IPO? There's a big leap of faith going in here for investors.
Big time. So, like, why is it important to watch Bloomberg TV's coverage of this? We would give you that perspective, right? In the S1, a lot of it is boilerplate. Some of it is the risk factors section. But SpaceX are basically like, if we encounter delays, if we cannot make Starship reusable, if we cannot make Starship work, then all of the forward-looking things that we've outlined here will be impacted. They gave this TAM number, which is $26.5 trillion, just for AI in the enterprise. But it's completely predicated on this launch system working. And that's the tension here. So far, SpaceX has spent about $15 billion developing Starship, which in the scheme of the biggest IPO of all time, where they raised $75 billion at a $2 trillion valuation, is nothing. But they need this to work. And so, like, to get to that $26.5 trillion addressable market, a lot of people will be paying attention here ahead of a listing day, which could happen right end of June, July, something like that.
Bloomberg Tech co-anchor Ed Ludlow there with the exuberance around everything space and, of course, the SpaceX IPO. Let's turn now to the Asian equity markets because they're set to extend gains as oil dropped overnight. Yet FX and rates markets in Asia continue to feel the pressure from inflation. For more on markets, let's bring in Bloomberg Markets reporter Anthony Stevens. And Anthony, we're just talking about the next frontier when it comes to space. Well, it seems in the overnight session, we're very much focused on quantum computing as being the next frontier when it comes to this huge AI trade that we have with IBM surging.
Yeah, sadly, we don't have much quantum computing in Asia, and we did have rocket takeoff on markets yesterday. So today, futures are indicating up around 1%, which is hardly worth getting out of bed for these days. So the tech read-through into Asia from the moves last night, probably not as much. We see Korea flat, Taiwan flat, and I think traders are well ready to take a day off. The weekend has been, generally speaking, a bad time for kind of geopolitical tension, especially with regards to US and Iran. And, you know, you do see of the oil sector getting very high. Oil volatility is 70 plus, and we did see oil trade in a 6% range overnight. So there is some caution in the equity market going into the weekend after a very strong week.
Is this more about the durability of the risk-on backdrop from here and how much increasingly at these levels perhaps we're going to need solid developments when it comes to oil and inflation?
Right, we've repriced very hard, very fast, right? And a bit of caution here is required, especially as the dispersion between equities and the rates and FX market picks up. Korea is a really good example. Korea has the world's best equity market and the world's worst bond market at exactly the same time. And we saw the government paying a little bit of attention to that overnight. They're scaling back their June bond plans. This is the kind of macroeconomic re-entry into kind of the investor vision frame that will probably characterize the next week, right? We've had a lot of this tech move on like deep tech developments, but we need to refocus back on macro, back on geopolitics over the weekend, and then we will see what the next week brings. Today probably will work out to be net flat.
When it comes to the JGB space here in Japan, we saw a massive sell-off already just the past few days. We are seeing a little bit of recovery in the last two sessions, but despite these yields at multi-decade highs, we have seen the incredible weakness for the Japanese yen. Could we see a reversal here?
What's interesting is Japanese yen volatility has fallen off a cliff, right? So people are worried about intervention, but each successive intervention has become less impactful. Also, Japan's yen weakens when risk appetite is strong. So there's a lot of cross currents on the yen at the moment. The JGB function is also interesting. The BOJ minutes still leave a lot of doubt whether bond buying programs are going to be scaled back. So there is a lot of debate around what the government wants to do about yields. At the moment, it looks like the BOJ is stuck between a rock and a hard place. They are worried about higher yields, but they don't want to jack up interest rates too fast and dent Japan's nascent growth. If you see Japan's economic data, the country is very kind of K-shaped with the chip sector and export sector doing really well and the domestic economy barely limping along. So it is a very complex kind of macroeconomic situation for Japan at the moment.
Markets reporter Anthony Stevens there. And as Shery mentioned before, IBM shares jumped after the Trump administration agreed to award $1 billion to the company to build a foundry for producing quantum computing chips. The move is part of a broader $2 billion support package from Washington for the emerging technology. Let's bring up Bloomberg senior tech editor Nick Turner. And the excitement over quantum and quantum chips has been global in that sense, right? There's been a lot of investment and grants going into that space here in Australia as well. What are we seeing here when it comes to the priorities of the Trump administration and who's benefiting from that?
Well, I mean, you saw these $2 billion go out. IBM got the biggest share, but Global Foundries and a bunch of smaller companies did get money as well. And all their stocks of the publicly traded ones really shot up today. It's funny, there's a bunch of publicly held quantum companies that I think sometimes people forget about. In fact, NVIDIA's Jensen Huang famously said he didn't know there were any publicly held quantum companies last year. And the reason is a lot of them became public through SPACs and other sort of non-traditional IPOs. But there's a handful of these companies that are out there, and they all got a big boost today on this news.
Yeah, investors are definitely now paying attention to these stocks. But tell us a little bit more about why we're seeing governments, as Haidi just alluded to, lining up in order to put money in this sector.
Yeah, I mean, I think if indeed this is the future of computing, and I think a lot of growing number of people think it is, then certainly the U.S. government wants to be at the forefront of that. And they're using monies from the CHIPS Act, which has had sort of a rocky history since the Biden administration in terms of how it's operated. But this is a decent amount of money to be allocated to IBM and some smaller companies that hopefully will be able to use it to get closer to having quantum chips.
Bloomberg senior tech editor Nick Turner there with the latest on those quantum chips now rallying together with IBM. More ahead on the Asia trade. This is Bloomberg. Take a look at how we're setting up for the Japanese market opens. We have seen a little bit of stability for the Japanese yen, but very close to that, what we're considering the intervention zone near that 160 level. Nikkei futures at the moment not doing much, but this, of course, after Japanese stocks gained for the first time in 6 sessions. We're also following the JGB space very closely. We did see a little bit of a recovery after a strong 20-year auction earlier in the week, but of course, we are watching for those inflation numbers out of Japan, not to mention, of course, the latest on the BOJ as we head towards the Japan June decision. And take a look at Nidec stocks, because in the past year to date, we have seen a little bit of recovery, but after falling to about a third of its value in the past 5 years. This is the world's largest maker of precision motors, which has faced a few issues lately. It's launched an external investigation into potential quality issues involving unapproved changes to materials, processes, and designs across multiple production sites. Let's get more on how the company is navigating this with CEO Mitsuya Kishida joining me now here in the Tokyo studio. We really appreciate your time.
Thank you.
Especially since you're doing a lot of mitigation fallout, right? It was not just the quality issues that we've talked about. There were some bookkeeping issues as well. Can you give us an update on how the investigations are going?
Yes, all the investigation around the accounting issues is pretty much online with our current schedules. And on top of that, we have recently found out that the quality issues, quality as a manufacturer is essential heart of the issues. So we are fully determined to go through all the detail of those root cause of those quality issues, and we will find out and come up to the solution toward the end of the August. That's
You're talking to customers right now. Have you seen any safety issues so far?
We haven't found any safety issues at all. And even right now, I have just returned from US talking to the customer, one of the very important IT-related customers. So it's very important for us to talk to the customer and what is the root cause, what is the current investigation going on. And we have asked a third party to fully, fairly investigate what is the root cause of those. And we are fully committed contributed in fixing those issues.
What are the options right now on the table if you find any issues and if you don't, to also not just mitigate the results from these investigations, but to rebuild Nidec's credibility?
Yes. Rebuilding the credibility is a first priority for us. And on top of those quality issues, and we are not this time we have asked a third-party investigation. In these processes, right after they found out any issues and any root cause, they immediately feed back to us, and we will start discussing those issues with our customers. So the third-party committee is to solve those quality issues as quickly as possible.
Where are the largest customers who have been affected by these issues?
Majority of the issues we have found is around the appliances, home appliances. And the rest, some of the automotive, non-related to the engine, braking, and so on. But those interior-oriented the automotive parts as well. And we have already started to talk to those customers as well.
Have you set up a separate fund in order to deal with these issues if they arise in the future as well?
No, funding itself has not been raised yet. And so far, this investigation is around the so-called 4M changes: man, machine, method, materials. So it's not that hugely impacted at this very moment under the current investigation. But however, whatever happened, we are ready to fund it.
So I think the questions have been also related around how we got to this point, right? And I spoke to Oasis Management's Seth Fisher, who of course holds a stake in Nidec, and this is what he had to say. Take a listen.
Culture that existed on the Nagamori-san clearly has to change, and in my opinion, hold Nagamori-san responsible for it. The independent report did hold him responsible. There's a responsibility committee that's going to continue looking at whether there's legal angles as well against Nagamori-san. We're looking forward to that culture change being replete across the company. So this was actually what we have not typically seen in Japan is actually typical financial fraud. And this is not my words. This is the words of the independent committee.
So Chairman Nagamori that Seth is talking about has now left the company, right? What sort of changes in the leadership structure and culture, as well as corporate governance reforms, are you implementing within the company?
We have set up the new committee to change the corporate culture, and I'm heavily working on that. And the majority of the root cause of those accounting issues is coming from the huge pressure from the top management. That has been proven. And also the quality issues, some of the root cause might be quite similar to that. So that's why I'm really happy to use the third-party committee to investigate fairly from outside matter. And actually, those investigations started from this January. But however, majority of the information comes up, people started to speak up after April, which is, we have totally renewed organization from April 1st. Then people felt that this is a time to talk about, this is a time to speak up. So I'm rather optimistic that the people started to talk about what was wrong on this company. And the people started to talk about how to change those cultures in a better way.
And of course, investors, activist investors also speaking up. How are you engaging with them?
They are going to finalize their report toward the end of August to be in time with our accounting report to the investigation party.
To be fair to Nidec, though, when it comes to the business performance itself, there's a lot of positivity, especially around data center-related demand. Tell us a little bit about how business fundamentally is faring at the moment.
Yes, business itself is still booming, particularly around the data center. Not only the data center, inside of the data center itself, but we are fully committed in providing the alternate, so-called emergency energy around the data center, which requires tens of the machines are necessary for one data center. Those are the really booming. We are now in the process of rebuilding the factory in the US, factory in China, India, and so on.
I think hard disk drives, also spindle motors,
Yes.
all of that. Nidec is quite the world-leading company there. What are you seeing in terms of potential disruptions around external shocks like the Iran war, tariffs as well?
So far, there is no huge impact on us. But however, small things like oils to be used in the machines, and we see some of the difficulties. But however, how to deal with a global supply chain. That's the nature of Nidec. That's why we have tons of factory globally. So how to deal with those supply chains, that's something we can overcome.
Yeah, because you have, 10% of your revenue coming from Japan, but about 20% each for the US and Europe and so forth. You're a very global company.
Yes.
How are you adjusting also to the macroeconomic backdrop when you have yields rising, when you have the yen so weak as well?
Yes, those things is always happening. They will never end. So something is always happening. So how to deal with the demand for each location. So that's why we have factories at each location. We have a fully rigid supply chain for each locations as well. So if there is something in some location, then some other area will support. Those are the global.
Yen 160 is okay with you?
I don't say numbers of the yen, but weaker yen can be seen. Stronger yen can be seen. So we have to adjust ourselves.
Mitsuya Kishida, really good to have you with us at a very busy time. CEO of Nidec joining us here in the Tokyo studio. And of course, you can get more on the biggest stories in the tech space on the Bloomberg Video Hub. You can also check out past episodes of Bloomberg Tech Asia and of course other shows. Bloomberg.com/videos. This is Bloomberg.
Take a look at the top global headlines that we're following this hour. And China has warned that it will take countermeasures if the European Union presses ahead with its new restrictions on Chinese imports. Bloomberg earlier reported that EU officials were exploring measures to protect the bloc's economy against an influx of Chinese goods. Sources say officials are set to debate the issue at a meeting next week. And sources say the Pentagon is weighing whether or not to scrap an $80 million conditional loan offer to rare earths refiner ReElement Technologies. That's over doubts about the company's ability to scale its technology and long-term revenue forecasts. The potential cancellation has sparked a clash with the White House. Officials there criticizing the Pentagon's handling of the deal. The US is directing flights with American passengers who have recently visited Ebola-affected countries to Washington Dulles International Airport for enhanced screening. All US citizens and residents who've been to Congo, Uganda or South Sudan in the past 3 weeks will be tested there. The outbreak in Africa is a rare strain of the virus, which has no vaccine or cure. Let's take a quick look at what we're watching when it comes to broader commodities. And of course, so much of this when it comes to the durability of this ongoing rally, even with regard to the stellar tech rally and AI rally that we've seen, really depends on what we see next with the developments on the geopolitical front, what happens with oil prices, rates, as well as that ongoing inflation picture as well. New York traded crude is seeing some upside, 1.5% higher. And we have really seen that rise after 3 days of declines, with again these risks over Iran, US in focus. Shery.
And Heidi, we take you to live pictures of Starship V3, SpaceX launching this key test flight just weeks before its planned IPO that could be the largest in history. Now you're taking a live look at Starbase. This is the 12th major Starship test overall, and it's not simply another prototype launch. Let's discuss the importance of all of this with our Bloomberg Tech co-anchor Ed Ludlow. Ed, thanks for hanging around. I mean, this is so consequential for SpaceX and the broader space industry. Tell us a little bit about its meaning.
Yeah, SpaceX's future business lines, its vision for humankind as a species being multiplanetary. It's all predicated on the success of the Starship program and it becoming fully reusable. So you are looking at Pad 2, which is a brand new pad at Starbase, top to tail, completely new architecture in V3 of the Starship spacecraft at the top, but also the Super Heavy booster at the bottom, slightly taller, 407 feet in total for slightly more propellant. And over the course of an hour, it's a critical test flight where the data is important. But the longer term goal, making it reusable, so crucial to what we learned 24 hours ago when SpaceX dropped its prospectus and its S1 public filing for an IPO that, you're right, could happen in just a few weeks' time. Whether it is Starlink satellite constellation, data centers in orbit around the Earth, or 1 million humans on Mars, none of that happens unless Starship is reusable and it works in the first place. And SpaceX could not have been clearer how they outlined that in the risk factors section and the boilerplate of the S1 filing when it flipped public. So this matters, but what SpaceX would tell you is that this is about the data. And whatever happens over the course of the next 65 minutes, it will be a success either way. So let's go to the SpaceX feed very shortly and listen in. I'm going to pick up, guys. We're at a hold here at T-minus 40 seconds. This is a completely, and no, we're not. The magic of television and the difficulty of space science. The hold at T-minus 40 is completely normal. They warned that this might happen going into it. Why? Well, for a large extent, a lot of the launch system is automated. So having a hold allows different teams, but also different processes within the launch system to catch up. As we went into this, there were no issues on the range with weather, with any other vehicles that shouldn't be there, and SpaceX was fully prepped for this. So a hold at T-minus 40 is normal. And look, I think that at the end of the day, that there's a lot riding on this, guys, right? Everyone is looking at Pad 2, Starbase, Texas. This is a highly anticipated 12th flight test of the Starship system, but it is a brand new system, brand new architecture, brand new hardware, the design of the fuel lines within the lower half of it. And this is difficult, but I think we've restarted the clock. So it looks like in about 30 seconds' time, we will see Starship attempt its 12th flight test. And so with that in mind, guys, save me here. I think we've stopped on the clock again.
No, I mean, to your point, Ed, about live television, also just how difficult and unpredictable these launches are. I mean, we have seen repeated failures in the past, right? So how important is it for the markets, especially as we're headed towards this largest in history potential IPO?
We're back to T-minus 41 seconds. We're on a hold, and we'll hope the guys in the control room listen into the feed. We'll find out what's going on. But completely normal to have this, right? And SpaceX warns about it as well. Let's bring this back to the IPO, which will be the biggest IPO of all time. You know, Shery, Haidi, SpaceX could not be clearer. We blogged about it extensively. I wrote about it in the column today, that for all of these big picture sci-fi ideas to work, for that $28.5 trillion market opportunity, the TAM that SpaceX outlined, they need Starship to work and be fully reusable. So the 11 prior flight tests have had different outcomes. What they've never been able to do is have the first stage, the Super Heavy booster, land or be caught by the pad and the tower on the pad. They haven't yet even attempted to try and get the Starship spacecraft, the top part, to land as that full sequence back on Earth. There have been different bit tests of it. And so what they would tell you, and I reiterate this, what SpaceX would tell you is that that's not the point here. That there's going to be a lot of excitement either way, but for them in this period, in the near term, it's about gathering data to get them towards that reusability.
And it's really interesting with the IPO ambition. SpaceX is also marketing itself as an AI company, right?
Yeah.
Tell us about how it's sort of positioning there and what opportunities it's wanting to wrestle away from what is already, a very difficult market.
Total addressable market, 28.5 trillion. But of that, SpaceX is saying that 26.5 is AI, but it's all predicated on putting data centers into orbit in satellite form factor. So it's very difficult to join those two stories together. But in simple terms, it requires SpaceX to get something into orbit. And then from there, what we're largely talking about is running inference in space. right? We're talking about a data center that is in the factory of a satellite, not for the purposes of training an AI model, but for running it. And then what SpaceX is saying is that if they can own that market, the infrastructure, but also the underlying AI itself, then they will compete with OpenAI, Anthropic, Google, and do business with software and other companies around the world.
Ed, we're still waiting for the clock to get restarted. It's paused again, it's restarting again. But in the meantime, talking about that very capital-intensive AI investment, is there a risk around this, especially at a time when you have also seen billions of dollars in losses in the broader business, of course, headed to this IPO?
Yeah, the easiest way to explain that is if you put to one side the projections for the future, what did we learn from SpaceX's S1 about the current state of play? So last year, SpaceX booked about $18 billion of revenues. It lost almost $5 billion, net income as a loss. XAI, which will account for the AI or software as a product part of it, did about $3 billion in sales, but lost, basically in equal measure and is burning through the cash. This Starship platform that we're looking at, Pad 2, again, we're looking at live pictures, Starbase. We're on a hold at T-minus 40 seconds. That's quite normal. Starship, is a project that they've spent $15 billion on developing, but their hope is that it will bring back a return in terms of revenues, near, medium, and long term, far in excess of that. Guys, we don't know what's going to happen. This is the fun of television, but we have someone really excellent to talk to. Chad Anderson, Space Capital. This guy understands the bigger picture of the space economy. I would also point out, Chad, an early investor in SpaceX, and so, like many, you're waiting with anticipation on the IPO, but you see the big shiny pointy thing that's on your right shoulder we're showing on the screen right now? That's Starship V3, 12 test flight, we hope. Starbase, Texas. You tell me why it's important that this is a good mission today.
Yeah, you nailed it, Ed. This is incredibly important. This is key to SpaceX's long-term future, and it is a key factor, obviously, in the future of the business. Potential delay or failure is the company's top risk factor that they called out in their S1. The base case for the entire model requires Starship working at cadence by next year. So on the one hand, this is incredibly important, and this vehicle definitely needs to work. Does it need to work today is the question, right? If it goes off without a hitch, it reinforces the 2027 commercialization timeline, keeps the narrative intact heading into the roadshow. If something goes wrong, though, they're not putting all their eggs in this one basket. They have it won't be a major setback unless the pad is destroyed, because they have a factory line that is producing these things in mass. They have about 10 more Starships and 5 more boosters, that they're building this year. So they have, this is the 12th flight of their test program, and they have many more, that they can test with.
Hey, Chad, what I was trying to explain earlier is that this may be the 12th test flight, but and I think that they're saying that they might release the hold in 90 seconds, so we'll both try and keep it brief. But basically what I tried to answer with Shery and Haidi earlier is, why is it important, the performance? Why have they done a new architecture, new hardware, and try and improve the payload capacity? Why does that link to the AI story in the future?
Oh, yeah, absolutely. Look, this is a revolutionary vehicle with revolutionary capability. Fully reusable. Before SpaceX, no one had even imagined an architecture like this, right? So what does it take to make a rocket fully reusable? Not just the booster, but also the ship that carries the payload and everything else. So what is those, the heat shield and the tiles that they have built these themselves from scratch. They have tested all different variations, right? This 12th test flight incorporates a ton of testing and a ton of learning. And the purpose is to build a vehicle that will take the most mass to orbit, is fully reusable, and reduces the price the cost of launch to 99% of what it is today. And that is for SpaceX. That is their internal cost, which enables them to launch all of these new Starlink foundational satellites, the AI sats, the telecom direct-to-cell sats, and the broadband Starlink satellites. That's what they're working towards here.
Just like insight of someone that has supported this company, invested in this company, tracked this company, and we will with time. Like, you understand the bigger picture, right? The value of data that's generated in space. There's a fix in place, and I see the clock going again. We're at T minus 30, and you probably agree with me, Chad, that I think the best thing we do at this juncture is we go back to a T minus 41 hold. I jinxed it. I'll be honest with the audience. This is difficult, and we're going to do our best. So the question I was going to have for you, right, is that in the S1, when I was reading through it, the rapid reusability part, the thing is, to date, even though this is brand new architecture, I completely understand that, we haven't had a full test in the sense that they have never tried to launch Starship as a full stack with Super Heavy, catch the booster Super Heavy on the pad with the tower, and then try to land Starship using the system on terra firma. Could you just riff on that a little bit?
Yeah, I mean, there's so many different steps to this, and there's the big obvious changes that you can see, right? That this ship is fully tiled with heat shields, right? So they are actually going to test this as if they're going to bring it back. But they need to make sure, because the pad is super important. You don't want to damage the pad, right? So they're going to land these things out in the ocean. Sorry, I was just watching.
Chad, you're okay. You're dealing with this. You're dealing with the same thing I'm doing. Whereas we got the magic producers in the control room, we got the Bloomberg News space team in the IB, and everyone's going scrub. I think it's a scrub. But the disadvantage that you and I have is we're talking to each other live on television. So I think we have confirmation at this point. Waiting on the team, guys, and Haidi and Shery. I think you will be there soon as well. Mm-hmm. It's a scrub. So the good news is that they can try again, right, Chad? I'm going to give you just 30 seconds, but tell me about the pipeline here. They could go again next week.
Yeah, that's the point, right? Is that it looks like they're ready to go. It might just be a sensor issue. It looks like it might be something small. I mean, they're going to comb through the data and see exactly what happened, and they might be flying, very soon. That's the whole point, is like this test program is progressing very rapidly for the revolutionary capability that they're trying to bring online. So it's exciting. It's really difficult to throw a party, to plan anything around a launch, because, especially a test program like this. But we'll see it fly very soon, I'm sure.
Okay, it's not going to go today, but I've highly valued the conversation. Before I let you go, the big picture here, and I had to do a double take. I wrote about it today. We've been talking about it all day. Total addressable market, $28.5 trillion. Space Capital, your firm, you've done the studies. You've done the reports. You tell me, Chad Anderson, is that TAM number real, or is it science fiction?
So the big takeaway from me in this S1 is that SpaceX is no longer a traditional space company, in the traditional sense of just, rockets and space stations. They are fully an integrated AI infrastructure company. That's clear in the TAM that they're putting out, the total addressable market that they're going after. It is now clear in their revenue, $19 billion last year, $15 billion going forward is coming from Anthropic. So they are clearly an AI company, full stop. What's really sort of the takeaway for me is that this opportunity is much, much broader. The IPO is the catalyst, but space technologies are already the invisible backbone of the global economy. We are at an inflection point here. Think about this. Just 24 GPS satellites generated trillions of dollars in economic value. We have 18,000 satellites today, 2 million by 2040. That's where we're at. We are in the early innings of a multi-decade infrastructure cycle, and SpaceX owns the rails.
The news headline breaking: SpaceX has delayed and scrubbed the critical test of the massive Starship system this Thursday. After troubleshooting an issue just before liftoff, we got to T minus 40 and a hold. It ain't happening today, but it will happen soon. Chad Anderson, founder, CEO of Space Capital, with all the perspective and the context that you need. Thank you for having me here on Bloomberg Television. Space is hard. Haidi, Shery, have a good rest of the show and a good rest of the day.
But you know what's great, guys? We get to do this all over again when they try again. There's always another day. Our Bloomberg Tech co-anchor Ed Ludlow there as we get official confirmation SpaceX delaying that Starship launch after a troubleshooting a problem, I should say. This is the critical flight test 12 as we, of course, get more hype and anticipation ahead of that expected IPO as well. More ahead here in the Asia Trade. This is Bloomberg. JPMorgan CEO Jamie Dimon is taking a less alarmist view than some of his banking peers when it comes to AI's impact on finance jobs. Speaking exclusively to Bloomberg at the bank's China Summit, Dimon told us that the transition can be managed through attrition rather than mass layoffs.
It's the tip of the iceberg. You know, it's moving very, very quick. Coding, it's moving very quickly. So we want to just stay up there and use AI to serve our clients. And we're going to do that. How can I do a better job for our clients using a technology called AI? Just like we did it with a technology called digital, a technology called cloud, and way back a technology called mainframe. Like, it's no different. We got to do a better job for a client because that's how we compete.
So how will JPMorgan look like in 3 to 5 years on the back of developments in AI?
How will what?
How will JPMorgan look like? I mean, how will your business?
I hope we're thriving, but like, what's not going to change? People are going to have to hold money, move money, invest money, raise money. I think how that happens will probably change. You know, we use blockchain. There may be more blockchain being used to do that. There may be more people in AI jobs and less people in certain jobs. You know, so it'll all morph, but that's our job to serve the client. And of course, you know, I always point out that in the old days, we had, you know, the big banks were our big competitors, and the investment banks, and that was global. Different banks in every country. Now it's fintech in every country. And they're good, you know. A lot of these people, Revolut, Stripe, and Citadel, they're quite good. So we have to compete with all, and a lot of that competition will be technology and AI. So we are investing that money to be competitive, to do a better job for our clients. And if we're not fast and nimble, we'll lose.
And you're fast and nimble, right?
Sometimes we're fast and nimble. Sometimes I feel like we're a dinosaur and an elephant riding a bronco.
It is about manpower in the end. We've had the likes of
Manpower,
women power. It's about the workforce. We heard from Standard Chartered shedding about 8,000 jobs over a spread of 3 years. We also had Meta saying it's shedding the same number of people. I mean, how are you looking at manpower, women power? How are you looking at the workforce on the back of, you know, advances being made in AI?
So I think
efficiency.
the most important thing is we do a good job for our clients and use AI. Will it change the structure of jobs? Yes. I think there have been very few announcements that are AI related. I think a lot of companies have too much bureaucracy and they may use AI to cover up the fact that they should never hire those in the first place. But AI is going to change jobs. I don't know. I think it'll reduce some of our jobs down the road. I don't think it'll be all different types of jobs and you have to deploy it at a level like, I think we'll be hiring more AI people and probably less bankers in certain categories, and it'll make them more productive. So when you get up in the morning and you want to interview someone, it'll lay out what I've said in 14 different places. It'll give you questions. Your job will be the same. You'll just be much smarter at how you execute that job. So,
but I guess the question
but we will retrain and redeploy our people. You know, we have 10% attrition a year, which means our headcount is going down 25, 30,000 a year. And we're going to be prepared to say, okay, we love these people. They're great. We're going to take care of them. We're going to give them reskilling, new skills, better jobs, move them somewhere else, maybe early retirement. And then I think society maybe need to do a little bit of that.
JPMorgan CEO Jamie Dimon speaking exclusively with Bloomberg's Insight anchor Hasinda Amin in Shanghai. And here are some of the other corporate stories that we're following at the moment. Bloomberg's been told that regulators in Hong Kong and Singapore are seeking answers from Standard Chartered after CEO Bill Winters' controversial remarks on lower value human capital. Winters made the comment this week when referring to the role of AI in the bank's plans to cut 8,000 support roles over the next 4 years, has triggered a social media backlash against the Asia-focused lender. Samsung will distribute almost $27 billion to chip employees as bonuses this year under its last-minute deal with labor unions to avert a strike. Based on 2026 profit estimates, Bloomberg calculations put the average payout per worker at about $340,000. The tentative union deal still requires a vote by members, but would see the new bonus program continue annually for at least 10 years. Smart ring maker Aura Health has filed confidentially for a U.S. IPO, seeking to capitalize on growing demand for wearable devices. A source tells Bloomberg that company is working with banks, including Goldman Sachs, Morgan Stanley, and JPMorgan. We're told Aura plans to go public later this year, but the company says it's still working on pricing the offering. More ahead on the Asia trade. This is Bloomberg. Take a look at how Japan is setting up for the market opens as we're still digesting the latest numbers from their CPI data for the month of April. We saw the headline inflation number growth of 1.4%, decelerating from the previous month, also coming in below expectations. But of course, it's a core CPI number that we're following very closely. And what the BOJ watches exclude fresh food. And you have growth of also 1.4%, which is below economists' expectations, also decelerating from the previous month. Now, this might complicate a little bit the BOJ's decision in June, given that you are seeing decelerated inflation concerns. The government has stepped up measures to ease the cost of living, given that, of course, we have a weaker Japanese yen importing inflation prices. Also, not to mention that companies are continuing to pass on higher labor and materials costs to customers. You can see the Japanese yen very close to that perhaps intervention zone that we're watching around that 160 level. You have heard from Citi recommending that traders short the dollar against the yen headed towards the June BOJ decision. Take a look at some other crosses that we're following as well, because we saw the U.S. dollar a little change in the overnight session, consolidating below its 200-day moving average. In fact, what's been interesting is that FX volatility remains unusually subdued right now. Do watch out for the euro, though, because we saw that downside pressure after euro area PMI data also showed that business activity contracted in the region at the fastest pace in 2.5 years. And do watch out for the offshore yuan. We've been talking about this, Haidi. I mean, China has been sort of the outlier to all of the fallout from the Iran war, whether it's the resilience of its currency or its bond market.
Yeah, and of course we continue to watch the, that outlier performance, right, versus what we've been seeing as the ongoing trend in broader global bond markets. We did see overnight Treasury futures are raising most of those declines. Oil prices, of course, seeing that sharp fall, and now we're seeing that sharp move higher for crude prices. But we are seeing that play out when it comes to the Aussie and Kiwi bond situation. We're seeing some gains there, continuing from the previous day's jump. We had Aussie bonds rallying in the Thursday session as well. Traders starting to dial back a bit when it comes to expectations for further tightening from the RBA. We had the unemployment rate climbing to the highest level since November 2021. So these concerns now perhaps shifting from that inflation target to the resilience of the labour market here in Australia. New Zealand as well, looking at the labour market situation there. We had April job ads just in data out this morning, increasing by just shy of 1% from March, according to that latest data. So that gauge falling for a second month. Let's take a look at how we're setting up when it comes to the broader equities trading session as we get cash trading coming online in just about 5 minutes or so. Sydney futures looking like we're setting up for some gains, about 0.5% there. We are also getting some optimism coming through in futures trading in Japan as well, as we see that broad positivity for this session. A second day of gains expected across the Asia-Pacific region as we have US futures also edging a bit higher. There is still broad optimism when it comes to these US-Iran talks, despite, of course, being tempered somewhat by the comments that we heard from Iran over nuclear stockpiles and such. And that's also why, of course, we're seeing that reaction in oil, Shery.
And according to all of the headlines, we've seen the incredible volatility in the oil space, right? So WTI fell to the lowest in almost 2 weeks. You're seeing a little bit of recovery in the Asian session. So we'll be watching the open for Brent crude prices as well. The market opens in Sydney, Seoul, and Tokyo are next. This is Bloomberg. This is Asia Trade. We're counting down to Asia's major market opens after we saw some gains on Wall Street that took the Dow to another record high. Haidi, of course, we have seen the optimism around potential diplomacy with Iran. So anything that doesn't lead to a confrontation or a breakdown of the ceasefire seems to be taken as good news. Not to mention that we had a rally in quantum stocks with IBM getting awarded $1 billion contract by the Trump administration.
Yeah, just another reason for this tech rally to continue going. Right, we know that quantum has gotten so much attention in other parts of the world, particularly here in Asia and here in Australia as well. But it'll be interesting to see kind of, I guess, the resilience of this rally, Shery, as you say. Some of those comments that we heard from Iran kind of going contrary to the possibility of a longer-term ceasefire being negotiated.
Yeah, in Japan, we actually had the first gain for Japanese equities in about 6 sessions. So we'll see how they open today with the Japanese yen holding very close to that 160 level against the U.S. dollar. So we're very close to that intervention zone at a time when we're also watching the JGB space. We had seen a little bit of recovery in Japanese government bonds after we saw a solid 20-year auction earlier in the week, perhaps really easing some of those concerns about the fiscal situation here in Japan as well. We're also digesting the latest CPI numbers because we had a little bit of a miss when it came to the core CPI increasing or accelerating less than economists had expected. So that sort of could make the situation a little bit more difficult for the Bank of Japan after solid economic data on other parts of the economy, like GDP, for example. But you can see the Nikkei coming online to the upside of about 0.3% as we continue to watch the tech sector, as we've been talking about. And of course, the Kospi, very important for that. The South Korean stock market just surged in the previous session. Although the Korean won remains under pressure, we are talking about those 1,500 levels. We are actually expecting that 24-hour FX market to start its pilot program at the end of next month. So that will be key to watch when it comes to liquidity and the FX space, as we're seeing a lot of downside pressure for the Korean currency. Also a lot of downside pressure for Korean bonds. But we are now seeing from the finance minister, Haidi, some signals that they might be cutting debt supply.
When it comes to treasuries, of course, which has been really one of the main elements in terms of trying to work out where this broader risk asset rally goes from here, we had a bit of oscillation, really, when it comes to U.S. treasuries. We saw them erasing the drop as oil prices signaling that there has been some progress being made when it comes to Iran-U.S. negotiations. We saw that then, again, the picture changing as we heard some of those comments around uranium causing some concern as to whether that those long-term issues on nuclear ambitions can actually see any sort of compromise. This is the picture here, though, as we continue to see some positivity when it comes to sovereign bonds in Australia and New Zealand as well. When it comes to Australia coming online, we are seeing kind of a split session at the moment. We're seeing energy the biggest laggard, about 0.7% lower again, but the likes of materials, financials, even some of the consumer names are doing quite well. There has also been a pullback when it comes to RBA expectations as well, given the weakness that we saw in the labour market data that came out on Thursday. As Shery mentioned, oil is still sort of front and centre here. We're now seeing a pop of just about 2% with Brent coming online there, mirroring some of the gains that we saw in WTI. So again, we're resuming these gains after a couple of sessions of respite. Well, JPMorgan's Global China Summit continues today in Shanghai. Our Bloomberg Insight anchor Haslinda Amin is at the event and standing by with our next guest, Has.
That's right, Haidi. Joining us now, Jonathan Curtis, Portfolio Manager at Franklin Templeton. Good to have you with us, Jonathan. I mean, it's hard not to start with that delayed SpaceX launch. I mean, this is on the back of that mega IPO announcement. Is this significant that they're delaying this launch?
No. SpaceX's superpower is managing complex systems and change. And they are being careful and deliberate. They are being engineers right now. They will figure this out. They have proven that they know how to launch rockets into space, build a broadband network, and they're just being careful, as they should be here. They've got a new pad, a new rocket. This is exactly what they should be doing.
It's just a matter of time before it launches.
Exactly.
It's not just SpaceX that's announcing an IPO. I mean, it's Anthropic, it is OpenAI. Is there a sense that these tech space companies are at a time when the internet companies were launching as well, were IPOing as well? Can you draw the comparison?
Yeah, listen, I lived through that time as an engineer I was an engineer in the telecom equipment industry, and there's many, many comparisons that we can make between then and now. The most important is this. Back then, there was dark fiber everywhere. Telecom services companies were laying out infrastructure far in advance of demand. And we had not figured out the business models to really make these internet companies work. Today, we are not in that same spot. There are no dark GPUs. We are short of compute massively. And the most bullish signal that is going on in the markets right now is that Anthropic revenue chart. They have gone from, at the end of 2022, they had about $10 million of revenue. They 10 times it in a year. Then they 10 times it again to $1 billion. Then they 10 times it again to almost to $10 billion. In the past 3 months, they have added $20 to $30 billion of recurring revenue. We are in a massive surge of end demand. Enterprises paying for tokens, paying for artificial intelligence, and it's largely on one job category, software development. So we do not think we are in a bubble. We think we are at the beginning of something profound, the beginning of a profound productivity shock.
So if you can get a piece of the IPO, you get in, you buy.
Well, we already own it in the strategy that I manage. We own Anthropic, we own OpenAI, we own
But for the rest
SpaceX.
of us?
We are very bullish broadly on the category. I won't get into specific names, but broadly on the category. And we do not think markets are pricing in what happens downstream. When companies start applying this into their businesses, how that will allow them to deliver better outcomes to their own clients, take market share, and manage their costs. It's a very, very exciting time.
Yet some people say the market's already priced for perfection. I mean, that's quite a contradiction to what you're saying.
Yeah, we disagree. If you look at the S&P 500, it's trading, I don't know, 22 times forward earnings, but that is dominated by 7 to 9 very big companies on the market cap weighted basis. But let's look at it on an equal weighted basis. That's a better representation of how individual names in the market are trading about 17 times forward earnings. That's relatively in line with the past 10 or so years. The market is not pricing in the productivity shock that we think we're going to see in the financial services industry, in the healthcare industry, in the media industry, as artificial intelligence is applied into these businesses and we see not only greater productivity, new value created, but also managed costs. That's not in earnings estimates right now for the broader economy. So we don't think the market is overpriced.
Increasingly, it is shifting to Asia, right, when it comes to tech and AI plays, the likes of Korea. Despite the recent sell-off, it is still up 70% year to date. I'm just wondering if people are underappreciating the concentration risk. After all, the Kospi is about 2 stocks.
Yeah, that's right. Really what you're asking about is what is the importance of memory in all of this? And as we enter this agentic era, remember in artificial intelligence, we're really 3 big phases. First was the generative AI phase. Write me an earnings document or summarize an earnings document, help me write a better email. The next phase was reasoning, help me think better about a problem. We're now in the agentic phase. Do the work. And through each one of those phases, the demands on the compute infrastructure have evolved. As we enter the agentic era, the demands for GPUs will be very, very strong, but we also need lots of CPUs and we will need lots of memory. And so that is why firms like a Samsung, a Micron, an SK Hynix are doing very, very well. The memory demands are very, very strong. And again, it's just getting started. We've really disrupted one job category.
And the Kospi can continue its lead.
I think so, because it is dominated by the likes of SK Hynix and Samsung, and they are critical memory suppliers.
The deal that Samsung signed with this labor union, does that reshape the way you think of Samsung as a stock?
Well, certainly we own it. I think that its labor union is being opportunistic. I didn't get really wrapped around the axle on the labor union.
But average bonus of $340,000, that is quite a game changer.
And pricing for memory is up meaningfully. They have very, very unique skills. We think the demand is going to far outstrip the increased costs that they're going to have to pay.
So still buy Samsung?
we like the memory space broadly, and we think that investors do not appreciate how big this agentic era is going to be. That is going to be great for memory companies.
How else do you play AI in Asia?
Well, so certainly there are contract manufacturers here. There are hardware companies here. There are also interesting open source model companies here that are trying to build business models around it. Now, specifically in Asia, we own Alibaba and Tencent. So we are back into China. We were very, very careful with China over the past many years because we didn't know the rules. Certainly the rules would change on investors.
And you're back because?
We're back because we think the two names that we own in China are tied to something that the Chinese government cares a tremendous amount about, being a leader in artificial intelligence. They need their market leaders to win this game. And so we do not think they're going to change the rules on their two leaders in artificial intelligence, an Alibaba and a Tencent. So that makes us much more comfortable being back.
Do you think the world is still underappreciating the innovation out of China?
Absolutely. China has been an incredible innovator here for the past 26 years. Their markets are priced like they are facing big challenges. They're not pricing in those innovation capabilities that are also very, very strong in China. So we think it really is a G2 type of framework. The U.S. is a fantastic innovator, but so is China. And so we are comfortable being back in those AI-related names where we're confident the government wants them to win.
You're comfortable and you're confident about the outlook for AI and CapEx. I'm just wondering, these are, I guess, changing circumstances, right? Higher for longer. At some point in time, I guess earnings will get hit.
Yeah.
How are you looking at the prospects for earnings?
Well, so certainly what you're getting at is I think the higher inflation, the higher fuel costs, the higher interest costs. Those are all areas of concern for us. We hope that some sort of deal is reached in the Middle East, and ultimately that the strait gets opened up and oil starts to flow again. That will bring down pressures on inflation and certainly oil. And so hopefully this is a temporary situation that we're in right now. But again, we do not think, and yet we're starting to see enterprises experiment and deploy at scale artificial intelligence and take out and rewire their cost structure. We're seeing it throughout Silicon Valley. We have seen very strong revenue growth from many of the companies in Silicon Valley, but also rewiring of their cost structures, rewiring of their organizational structures. And we think that particularly first with the technology companies, we will see the AI benefit of selling artificial intelligence, but we will also see the AI benefit of rebuilding their organizational structures to be dramatically more agentic.
The messaging is pretty clear. Bullish. Jonathan, thank you. Jonathan Curtis there, Portfolio Manager of Franklin Equity at Franklin Templeton. There you have it. Heidi, handing back to you.
It's a great conversation there. Let's get you to one of the big movers that we're seeing in the Sydney session. And Guzman y Gomez, this is, of course, a restaurant chain, shares jumping almost 20% on its plans to exit the US market. This is an interesting one because this stock has clearly been one where shareholders have been losing patience and interest in, right? It's one of the most shorted here in Australia. It's down about 16% so far this year. And up until recently, they had sound fairly positive still, or upbeat about their US ambitions as early as April, early April, when they said that new outlets had delivered revenue growth, operations were improving. We did see the CEO, one of the CEOs, Stephen Marks, spending 3 months in the US trying to bed down that business. But now we are hearing that they're closing its Chicago restaurants, exiting the US market due to the business requiring significantly more time and capital than expected, that the results generated so far have not been acceptable. They'll take a charge of $30 million, between $30 to $40 million for quitting the US. Underlying earnings from the Australian business looking at around 85 million Aussie for the year. That's a jump of 29% from the prior year. So clearly you see that relief and approval from shareholders that have been pretty downbeat on this stock this year. More ahead on the Asia trade. This is Bloomberg. Well, SpaceX has delayed a critical test of its massive Starship rocket on Thursday after troubleshooting various problems just before liftoff. Bloomberg's Paul Allen has the details. And Paul, of course, this is closely watched for a number of reasons, not least of which it was the day after we saw the official IPO notice as well. So what happened? I mean, we know that these things do happen with launches.
Yeah, they do happen. And this was a problem with the launch pad ground system. Apparently a hydraulic holding tower arm did not retract. But it's worth pointing out that the whole launch pad is entirely new. It was the first time they were using it. It's been rebuilt from the ground up or from nothing at all. So an abundance of caution really with this new pad. It's got new flame trenches, it's got a new water deluge system, and the rocket's new as well. What we're seeing here is the learnings and lessons from the previous 11 test flights crammed into this. We haven't seen a launch since October. So this is a very new and newly redesigned system. It was going to be the first test of the new V3 Raptor, which has got it's lighter, it's more powerful. The whole rocket has twice the thrust of the Saturn V rocket, which took NASA to the moon 50 years ago. 50 cameras as well. It had a whole bunch of simulated Starlink satellites on board, the last two of which had their own cameras. So we were looking forward to our first ever view of this on its own in space, but not to be. Maybe we'll have another launch window tomorrow.
At the same time, a lot more conversation around the AI ambitions as well.
Yeah, this launch very important for those IPO plans that you mentioned. It needed to be a success to just show what this giant rocket can do. I mean, this could value SpaceX at $2 trillion. They want to raise $75 billion to really get this program rolling. And we heard from Chad Anderson earlier, Space Capital founder and CEO. He said, look, the whole model requires Starship to be up and running and working at cadence by 2027, it's getting very, very close. Starship's already doing things that weren't even thought possible. This whole idea of a reusable launch system, it was a fantasy a decade ago. But now Starship or SpaceX has this whole pipeline of ships and boosters, and yes, they've had failures, but that is how this company rolls. They blow things up, they take their lessons, they try again. A lot more to prove though. Still haven't seen an orbital flight. We still haven't seen ship-to-ship refueling or a return and catch of the upper section. So Flight 12 was going to be another critical step along the road to achieving these ambitions.
Bloomberg's Paul Allen there with that delayed launch today from SpaceX. And the top corporate stories that we're following as well, smart ring maker Aura Health has filed confidentially for a U.S. IPO, seeking to capitalize on growing demand for wearable devices. A source tells Bloomberg that the company is working with banks including Goldman Sachs, Morgan Stanley, and JPMorgan. We're told Aura plans to go public later this year, but the company says it's still working on pricing the offering. Samsung will distribute almost $27 billion to chip employees as bonuses this year under its last-minute deal with labor unions to avert a strike. Based on 2026 profit estimates, Bloomberg calculations put the average payout per worker at about $340,000. The tentative union deal still requires a vote by members, but would see the new bonus program continue annually for at least 10 years. Bloomberg's been told that regulators in Hong Kong and Singapore are seeking answers from Standard Chartered after CEO Bill Winters' controversial remarks on lower-value human capital. Winters made the comment this week when referring to the role of AI in the bank's plans to cut 8,000 support roles over the next 4 years. It's triggered a social media backlash against the Asia-focused lender. Now, we've also heard from JPMorgan CEO Jamie Dimon. He's taking a less alarmist view than some of his banking peers on AI's impact on finance jobs. Speaking exclusively to Bloomberg at the bank's China summit, Dimon told us the transition can be managed through attrition rather than mass layoffs.
It's the tip of the iceberg. It's moving very, very quick. Coding, it's moving very quickly. So we want to just stay up there and use AI to serve our clients. And we're going to do that. How can I do a better job for our clients using a technology called AI? Just like we did it with a technology called digital, a technology called cloud, and way back a technology called mainframe. It's no different. We got to do a better job for a client because that's how we compete.
So how will JPMorgan look like in 3 to 5 years on the back of developments in AI?
How will what?
How will JPMorgan look like? I mean, how will business?
I hope it's thriving, but what's not going to change? People are going to have to hold money, move money, invest money, raise money. I think how that happens will probably change. We use blockchain. There may be more blockchain being used to do that. There may be more people in AI jobs and less people in certain jobs. So it'll all morph, but that's our job to serve the client. And of course, I always point out that in the old days, we had, the big banks were our big competitors, and the investment banks, and that was global. Different banks in every country. Now it's fintech in every country. And they're good. A lot of these people, Revolut, Stripe, and Citadel, they're quite good. So we have to compete with all, and a lot of that competition will be technology and AI. So we are investing that money to be competitive, to do a better job for our clients. And if we're not fast and nimble, we'll lose.
And you're fast and nimble, right?
Sometimes we're fast and nimble. Sometimes I feel like we're a dinosaur and an elephant riding a bronco.
It is about manpower in the end. We've had the likes of
Manpower,
women power. It's about the workforce. We heard from Standard Chartered shedding about 8,000 jobs over a spread of 3 years. We also had Meta saying it's shedding the same number of people. How are you looking at manpower, women power? How are you looking at the workforce on the back of advances being made in AI?
So I think the most important thing is we do a good job for our clients and use AI. Will it change the structure of jobs? Yes. I think there have been very few announcements that are AI related. I think a lot of companies have too much bureaucracy, and they may use AI to cover up the fact that they should never hire those people in the first place. But AI is going to change jobs. I don't know. I think it'll reduce some of our jobs down the road. I don't think it'll be all different types of jobs, and you have to deploy it at a level like. I think we'll be hiring more AI people and probably less bankers in certain categories, and it'll make them more productive. So when you get up in the morning and you want to interview someone, it'll lay out what I've said in 14 different places. It'll give you questions. Your job will be the same. You'll just be much smarter at how you execute that job. So,
but I guess the question
but we will retrain and redeploy our people. We have 10% attrition a year, which means our headcount is going down 25, 30,000 a year. And we're going to be prepared to say, okay, we love these people. They're great. We're going to take care of them. We're going to give them reskilling, new skills, better jobs, move them somewhere else, maybe early retirement. And then I think society maybe need to do a little bit of that.
JPMorgan CEO Jamie Dimon speaking exclusively with Bloomberg's inside anchor Hasinda Amin in Shanghai. One stock that we're watching in the Japanese session, you can see right there, SoftBank gaining more than 9%, almost 10%. We're talking about the highest level since October of last year. And SoftBank, of course, a majority stakeholder of ARM, and the chip design company has seen a breakout, especially around the month of April. We have heard from Jefferies that given the solid earnings coming from NVIDIA that we saw earlier in the week, we will see a positive read-through when it comes to ARM Holdings as well. And you can see the upside of SoftBank, of course, very much exposed to the AI trade, semiconductor trade, especially through its OpenAI investments as well. More ahead on the Asia trade, this is Bloomberg.
The top global headlines that we're following this hour, and China has warned that it will take countermeasures if the European Union presses ahead with new restrictions on Chinese imports. Bloomberg earlier reported that EU officials were exploring measures to protect the bloc's economy against an influx of Chinese goods. Sources say officials are set to debate the issue at a meeting next week. Sources telling us that Pentagon is weighing whether to scrap an $80 million conditional loan offer to rare earths refiner ReElement Technologies. That's over doubts about the company's ability to scale its technology and long-term revenue forecasts. The potential cancellation has sparked a clash with the White House, officials criticizing the Pentagon's handling of the deal. The U.S. is directing flights with American passengers who have recently visited Ebola-affected countries to Washington Dulles International Airport for enhanced screening. All U.S. citizens and residents who've been to the Congo, Uganda or South Sudan in the past 3 weeks will be tested there. The outbreak in Africa is a rare strain of the virus which has no vaccine or cure.
Take a look at how commodities are trading early in the Asia session. We are seeing oil rebounding after 3 sessions of losses already. Of course, the focus has been solely on what's happening with the Iran war. Headlines perhaps pointing to a little bit more optimism when it comes to diplomacy working between Iran and the U.S. But really gold trading in a narrow range, because all of what this does is lead to perhaps more guessing about where the rate trajectory from the Federal Reserve goes from here, right? Inflation, energy, equity, that's a channel where you're seeing, of course, yields continue to move. And we have seen some downside pressure in the metal space as well, given, of course, the growth outlook is still uncertain. This is Bloomberg. Take a look at how we're trading early in the Asia session. We're seeing upside for most markets open at the moment, especially for the Nikkei and the Kospi, of course, very tech-heavy markets. And what we've been following, of course, is the rally that we saw in the overnight session as well around quantum stocks on that investment coming from the Trump administration on IBM. So we're seeing a little bit more broadening when it comes to the AI rally, perhaps quantum also seen as the next frontier of AI. In the Asia session, we're following SoftBank as well, because it's been seen as a proxy for the AI trade. They hold a large stake in ARM Holdings as well, and with NVIDIA's solid earnings, Jefferies now thinking that there will be the read-through and the gains for ARM as well, which has reached a record high. A different story perhaps for TSMC, losing its shine as the go-to NVIDIA proxy. Investors, as I mentioned, spreading those bets across a broader wave of AI winners, from memory chips to robotics, demand widening, lifting rivals like MediaTek and Samsung. Let's bring in Bloomberg's managing editor for Asia Equities, Lian Ting. Lian Ting, tell us a little bit more about this trend.
Yeah, this is more about AI trade evolving. For the past few years, TSMC was basically the clearest Asia proxy for the AI boom because it manufactures the cutting-edge chips designed by NVIDIA. But now, as you said, investors are looking at the next phase of AI growth. The market is shifting from the training phase, which requires a lot of top-end GPUs, toward inference, which is when AI models or AI tools actually are getting used in daily lives by consumers and businesses. And inference needs a much broader ecosystem. You need memory chips, you need CPUs, you need power management, cooling system, advanced packaging and storage. I can go on and on. So that's opening the door for companies like MediaTek, Murata, Nidec, Samsung Electromechanics, and firms tied to robotics and physical AI. So as a result, you can see TSMC shares really lagged behind many peers this year so far. MediaTek, for example, is up about 150% this year compared to about 40% gain for TSMC.
Does this mean investors are turning negative on TSMC?
Not really. This is more about broadening than abandoning TSMC. TSMC is still one of the biggest winners from AI spending globally. It continues to post very strong revenue and earnings growth because demand for its advanced AI chips remains extremely strong. But what has changed is that investors now want more exposure to more parts of the AI supply chain. We just talked about a bunch of them. And there is also rising attention on companies involved in testing, cooling, printed circuit boards. So that is just the broader backdrop. There is also one other dampener for further upside for TSMC, which is limitations for single stock holdings in many mutual funds. A lot of active funds have limitations on how much they can hold in a single stock. So since TSMC now makes up more than 40% of Taiwan's stock benchmark index, many funds can't just keep adding to it, to put it simply. So to stay exposed to the AI supply chain, they will have to look at other names connected to the same theme. In short, this is basically why it looks less like a rejection of TSMC, I should say. It's more like AI trade entering a broader second phase.
Bloomberg's managing editor for Asia Equities, Lian Ting Tu in Singapore. Let's take a look at what we're watching when it comes to trading in Korea. We are seeing some broad optimism across the region today, and of course some of the quantum-related names getting an extra boost and a bit of a chance in the spotlight, given the IBM grant story that really set off the quantum space overnight as well. Kosdaq is up by close to 4% at this point. Also looking at trading in SemiFive Inc., they're up by just about 2%. 2%. This is a SoftBank-backed startup that's aiming to become the TSMC of chip design. Well, SemiFive, for its part, reported a 137% year-on-year surge in revenue in its first earnings release since listing on the Kosdaq in December last year. The Seoul-based company says AI demand has driven production bookings up 74% in the first quarter alone. SemiFive's partners include Samsung Foundry. For more on the outlook, we're joined exclusively by the co-founder and CEO, Brandon Cho. Brandon, really great to have you with us. And I wanted to get a view as to, how life has been since the listing, right? Obviously still loss-making, and everyone wants to know when that's going to turn to profit.
Yes, first of all, thank you for having us. And as you said, we are making a lot of achievement in the market, and the panel just discussed about the broadening of the AI silicon ecosystem, and SemiFive is leading the way. So just to give you a brief introduction of what we are doing, we are an ASIC families, or as we call a design foundry. So we design custom chips for our customers and then supply those developed chips to the customer on the per unit basis. The interest on the custom AI chip are really surging, and as you mentioned, as we went public last year, we are seeing more even faster growing demand from all regions and all applications, not just within the data center application, but also in the on-device and the more server-like, more smaller servers and edge type of servers. So yes, we are seeing a lot of opportunities coming.
Where do you see the most opportunities? Because obviously geographically, the markets that you have clients at this point, fairly broad.
Yes, our customer base is geographically very well diversified, and for among the regions, especially North America and Japan, are the fastest growing market. Now we have our silicon supplying customers in Japan, China, India, Europe, and the US, of course, as well as in Korea. So each region has a different strategy in terms of what kind of products and technology they want to implement. So it is very important for an ASIC players like us to be really flexible and scalable to meet the demands and fulfill the requirements in designing and delivering those diversified types of AI chips.
Tell us about the Samsung Foundry partnership.
All right, so it's no secret that all the foundry business are seeing huge opportunities from AI demand, and more customers are getting interested in using Samsung Foundry's technology and also capacity. And it creates a huge growth momentum for SemiFive too. And at the same time, customers come to SemiFive too for our comprehensive and proven custom AI chip design solution. So we are adding demand, and also we are helping our foundry to close its new projects on their process nodes. So it's really a symbiotic relationship, and it is creating a lot of results. So for example, we recently brought up a huge 520 square millimeter chip on Samsung's SF4X, and we brought its very fast LPDDR5X interface to full speed just within 3 days, which is a remarkable technological trend which made enabled by the superior technology of the foundry. Additionally, we also kicked off a monumental 3D IC project on Samsung Foundry's 8LPU technology, which delivers 10 times higher bandwidth than HBM4 technology. So these are all frontier technologies that very few companies in the world can really execute, and we are turning them into reality with the help of our tight collaboration and partnership with Samsung Foundry.
As you say, I mean, so much of the focus is on the hyperscalers and the data centers, right? When it comes to some of the smaller clients, how much visibility is there and forward planning is there in knowing what types of chips and technology they're going to need, given how quickly this space is changing?
Yeah. So when our customers need more supply of an existing chip, they typically let us know 6 months in advance. And when they need an entire new chips to be designed, they come to us 2-3 years in advance. So we are in a position to have a clear view where the trend is heading. And as you mentioned, 2-3 years ago, when we were working with the customer for a new AI chip, in most cases, the chips were for data centers. But recently, we are talking more about on-device AI chips and the chips for smaller servers and edge-type servers these days. So if you think about it, so this means that while we still need a massive amount of intelligence to build at hyperscale data centers, there are millions and billions of places where we need smaller, more efficient, more specialized, or more private kind of intelligence. So they are using a lot of different technologies like 4, 5, 8 nanometer process rather than 2, 3, or more 3D IC DRAM integration rather than HBM technology, so forth and so on. So it is very important to be able to respond to this diverse type of technical requirements to seize these demand and opportunities.
You've talked about how the transition of accumulated development projects into mass production essentially was what was driving the positive earnings growth. Can you tell us about what the pipeline looks like in terms of future projects and where that cycle is going to head?
Yes, of course. So you mentioned that in the first quarter, SemiFive has recorded already 75% of production booking of all of last year. So the chips that we are getting orders from are making even more orders in the remaining time of the year. But at the same time, there are more chips that are entering into mass production stage this year and early next year. So we are expanding not just linear growth, but the compounding growth in our production revenue. And this is coming also from both data center demand and also the on-device demand. And we are very confident that we can sustain a very high double-digit number growth, if not faster. And now we are focused on doing it profitably.
How's the supply chain looking for you in terms of some of those risks, again, have become apparent with ongoing geopolitical uncertainty?
Yes. So it is true that many players want to diversify their supply chain, both in terms of capacity and technologies. And all of these trends and also the geopolitical shifts are really creating a lot of opportunity for us, and we are well positioned for that environment. So for advanced nodes, we are working with Samsung foundries, with fabs in Korea and in North America. And for legacy nodes, on the other hand, we are extensively working with global foundries, with fabs in North America and Singapore, and also in Germany. We are also working with all the major OSAT companies and important OSAT technology companies, so we can provide very diverse options in supply chain for our customer. And our customer base is also very geographically diversified in multiple continents. So we are leveraging at both ends from supply and also demand. We are leveraging this diversity in our supply chain to provide very flexible options for our customers. And this is creating a lot of opportunity in our business already.
Brandon Cho is a co-founder and CEO of SemiFive. Really great to have you with us. More ahead on the Asia trade. This is Bloomberg.
Right, and Bloomberg TV is at the JPMorgan Global China Summit in Shanghai. Let's head back to Insight anchor Hazinda Amin, who's there with our next guest. Haz.
Well, Shery's been about markets, it's been about AI, it's also about hospitality. Joining us exclusively, Benjamin Vuchot, CEO of the Hong Kong and Shanghai hotels. The group operates the Peninsula Hotels brand and also owns the Peak Tram, the Peak Tower, and the Repulse Bay in Hong Kong. Good to have you with us.
Good morning.
These are really uncertain times. There's in the uncertainty of when the Iran war will end. We have fuel shortages. We have volatility in the Forex space. I mean, how is your business being impacted by it all?
Well, hospitality, and particularly luxury hospitality, is a very resilient business. We've been operating in luxury hotels since 160 years with the Hong Kong and Shanghai hotels. And in fact, the Peninsula Hotel in Hong Kong will be celebrating 100 years in 2028. I think the recent expansion of the Peninsula hotels in Europe, for instance, with first our Paris hotel, our London hotel, and our Istanbul hotel, has been able to give us different avenues to mitigate some of the geopolitical tensions that we have. So today, we have 12 hotels, 12 Peninsula hotels around the world. 50% are in Asia. We're rooted in Asia, in Beijing, in Shanghai, in Hong Kong, and in Southeast Asia, or in Tokyo. And then we have 3 hotels in the United States, and then now 3 hotels in Europe.
So did you see a slowdown initially? From the impact of the Iran war, is it picking up now? What has been happening?
There's no doubt that the industry suffered some cancellations in March, particularly. I think it was a result of less airlift, less ability for people to travel. So you can't travel, you have to cancel your stays. But we've seen now a ramp up, particularly over the last 3 to 4 weeks, on both from people being able to travel back to the original destinations that they have, but also a bit of a shift of destinations. I think safety is very important for the leisure sector. So Greater China has been a great beneficial of that. We're seeing more people traveling into Hong Kong, even into Beijing and Shanghai, and Tokyo has been incredibly resilient. And at the same time, we're seeing a bit of a change in the pattern. It's much shorter booking period, which forces our teams to be much more agile, to be able to react to last-minute decisions that impacts, staffing, but it's also in fact pricing. But overall, I think we are able to mitigate now the bump that we all suffered in March, April.
Are Asian travelers choosing to travel within the region now?
Yes, indeed. I think we're in China today, in Shanghai, and it's very interesting to see that. First of all, there's continued travel, domestic travel within China. Our hotels in Beijing are performing actually very well. Combination of local but international. But the Chinese are starting to travel again. Hong Kong, Korea, Bangkok are the top 3 destinations, and we're seeing that they're traveling outside, but not too far. And safety is a big concern. So our business actually in Tokyo and our business in Bangkok and Hong Kong has benefited from this uptick in travel.
And would you also say that luxury travel, luxury hospitality, is pretty resilient despite the uncertainties and the challenges?
Indeed. I think both from a business travel and a leisure travel, the higher end segment is more resilient. We're seeing in the luxury industry, I come from a luxury retail background, we're seeing a big shift from buying goods to buying into experiences. And luxury hospitality, and the Peninsula in particular, is providing more than a bed. It's providing an experience. It's providing emotions. It's providing shareable experiences that really are making our guests come back, can bring their families, bring their friends. And this segment has been much more resilient than the regular hospitality segment.
The thing is, when it comes to hospitality, manpower is a huge issue, especially for hotels. How are you coping with that? And, where are you seeing the biggest challenges in terms of the regions, US, Asia, Europe?
I think that for a company like ours, we provide careers to people. We look after people very well, and we provide a lot of training. There's no doubt that there will be a shortage in the hospitality world in the long term, because those careers have been suffering a little bit from an appeal. But it's for us to
20-30% shortage in terms of manpower.
I think there's a statistic from the World Travel Organization that says by 2050 there would be a significant shortage.
And AI can counter that?
So I think it's 2 things that we have to do in the Hong Kong and Shanghai hotels. It's focusing a lot on that. First of all, we have to make sure we continue providing great service to our guests. So with service, you have to have the human touch. So we need to continue recruiting. We need to work with hospitality schools and create those careers for the young leaders of tomorrow. And secondly, how do we embark and how do we adopt AI to do some of the things that were done manually before, but can now allocate this time to the frontline staff and create this relationship and those experiences.
What do you see AI doing for you to help counter the resources shortage?
I think there's very simple things which already are in place at the Peninsula and the group in general. Email bookings, number of inquiries for emails. You don't need to have someone now checking this. This can be very much automated. The response and the connection is done personally, but filtering all this it's a huge improvement. And pricing, as well as making the experience more personal, knowing better your guest thanks to data, I think is going to be a big shift. And even in luxury hospitality, you can use data, you can use AI, but then bring back the emotional connection, bring back the human touch, and deliver exceptional service.
And in terms of expansion, where are you looking at expanding within the next 12, 24 months in 30 seconds?
We've just embarked into a strategic review. It's perform and transform. Perform is doing better with what we have, and transform is how do we take the brand to the next level. We believe in Asia, we believe in Greater China and Japan in particular, but I think Europe...
So expansion will be Asia-led or not?
So I think it's going to be a combination. We believe in Europe. Our guests want us to travel more to Europe and to get out of the cities, so more resorts, more branded residences, which is incredibly important for luxury hospitality. So more to come, but let's do better with what we have. That's a perform plan, and let's continue to transform. Let's take our guests to new destinations. Let's create new experiences, and that's going to be something. Let's get out of the four walls of the hotels, and let's create those great experiences for
Definitely
guests.
Get out of the four walls. Benjamin, good to have you on the show. Benjamin Vuchot, CEO of the Hong Kong and Shanghai hotels. Shery, handing it back to you.
Our Bloomberg Insight anchor Hasinda Amin there again from the JPMorgan Global China Summit in Shanghai. We have more to come. This is Bloomberg. Take a look at how we're setting up for the market opens across Asia. We have already seen some upside in markets that are open today, and perhaps continuing that tech theme throughout the session as well, and expanding on that AI trade with quantum-related stocks as well. We saw that upside in the Wall Street session, Haidi, with IBM surging on that award of $1 billion by the Trump administration. We've been following what's happening in Taiwan with the tech sector as well. As we continue to watch, of course, oil prices, a little bit of volatility, but perhaps a little bit of recovery in prices as well, with everything to do around the Iran war.
It's kind of like you're seeing a lid really stay on top of any strong moves in either direction, right? We are seeing, yes, some gains across equity sessions. We are seeing a little bit of strength when it comes to oil prices, but still, I think, fair to point out that Brent crude prices, whilst up being around 2% in this part of the session, pretty close to the overnight US close there. So it's not a huge move, but perhaps reflective of this ongoing back and forth when it comes to diplomatic talks on the situation between the US and Iran, though. The tech story, as you say, continues to be a driver. Japanese tech shares leading the regional advance. We do have a couple of interesting themes when it comes to the Hang Seng Tech Gauge and some of these Chinese AI names as well. Some plans to add Jippo and Minimax when it comes to these indices. Potentially, we see some of these Chinese names come more into the mainstream.
Overnight, we actually had the Nasdaq Golden Dragon Index falling for 6 consecutive sessions. So we'll see if we see a little bit of a rebound in the Chinese session today. But it's been interesting to watch the yuan pretty resilient. The bond market's also pretty resilient to the global debt sell-off. So that outlying trade, really a big theme in mainland China. But that's it from the Asia trade. Our markets coverage continues. The China show is next. This is Bloomberg.